For the details, the ASEAN Summit of Finance Ministers kicked off in Cebu. Day one was a debate on whether or not Asia is bound to follow the new mediocre narrative, a phase of relatively low growth for a long period of advanced economics such as the United States and countries in Europe.
Today, 3 years later, we find a global economy that is transitioning from a deep recession to a period of relatively stable growth. The IMF central projection, based on its January 2017 WIO update, is that global growth will rise to a rate of 3.4% in 2017 and 3.6% in 2018, from a 2016 rate of 3.1%. Although this represents an improvement for the global economy, the average growth over the post-GFC years, that's 2010 to 2016, of 3.8% remains below its pre-crisis level, 2002 to 2008, of 4.5%. Now, growth among advanced economies is being led by the U.S., which is expected to return to the path of sustainable growth based on the latest readings by the IMF. The IMF projects 2.3% and 2.5% growth for 2017 and 2018, respectively.
The central bank chief, however, noted that some emerging market economies are experiencing a slowdown driven by several factors.
Meanwhile, some EMEs are experiencing a slowdown driven by near-term cyclical and long-term structural factors. But many of them are still experiencing robust growth. We're no longer seeing the double-digit growth rates coming from emerging and developing Asia. A related question is why? Are we seeing an Asia that is on the path of subpar growth? In other words, the new mediocre?
He cited 4 things that could be risks or opportunities for ASEAN.
First on my list is growing protectionism. So far, we have only heard the rhetoric from the U.S. president. There are still no clear policies, only desired directions. In the UK, while they have moved to trigger Article 50, the negotiations for the formal exit can take some time. How are Asian economies preparing for this? The level of openness in the region is varied. For some, like the Philippines, domestic aggregate demand has been the main driver of growth for years now. For others, like China, they have moved away from export-oriented to more service-oriented growth. In the meantime, intra-ASEAN trade has been increasing. In the case of the Philippines, ASEAN as a group has moved to become our #1 overall trading partner. By looking more inwardly, one may ask, is Asia limiting its growth potential? Or is it shielding itself from the adverse effects of shrinking trade? Second, financial spillovers. A disorderly reaction to possible U.S. interest rate hikes and broader uncertainty about asynchronicity of monetary policies in advanced economies could lead to capital flow reversals and spikes in asset price volatility in Asian emerging markets. This could contribute to large currency depreciation and inflationary pressures. Third, the middle income trap. Many Asian economies are considered to be at a stage of development at which, historically, sustained rapid growth becomes difficult, or the middle income trap. Thus, for Asian countries to avoid the middle income trap, sound macroeconomic policies that can effectively counter boom-bust cycles can be looked at. Policies that promote education and infrastructure, policies that create opportunities given favorable demographic trends. Fourth, demographics. Asia is entering a period of being at both ends of the demographic spectrum. While many Asian countries are concerned with aging populations, East Asian countries are concerned with aging populations. Other Asian countries are less affected. An aging population increasingly requires policy action for East Asian countries. However, countries that have relatively younger populations, such as India, the Philippines, Indonesia, and Malaysia, will experience declining dependency ratios. Prudent policies can help mitigate the adverse effects of demographic trends.